tax to indirect tax. Friends, enjoy the good deliberation by eminent speaker on direct tax, CA Ved Jain ji, and followed by CA Satish Agarwal ji. Over to CA Ved Jain ji. Please, sir, over to you.
Thank you, Vinay, and good afternoon, friends. And this is a privilege to be here and talk about the Union Budget 2025, which was presented by the Honorable Finance Minister. Now it is almost 50 hours old budget. As I see, the this budget is a special budget in the sense this has been presented after the third phase of this government. And the first budget, I will say, was on the 22nd July, and it has come within 6 months. As we see as a chartered accountant and we look at the economy, this budget is a balanced budget. The fiscal deficit, etc., is quite under control. Is the current 4.8% for the financial year 24-25, and next year it is projected to be 4.4%. The economy has been doing very well. Both collection on direct and indirect tax have been very, very good. And that's why there was a leeway available to the finance minister to give to work out various benefits. There was a lot of expectation, as is normal at the time of the budget, when the people, taxpayers, common man, agriculturists, industry, everyone expects something to get from the budget. And the finance ministers, as I say, the leeway was quite good. So that's why I believe she has been able to deliver a lot of things. And one of the best things, which I believe all of you all know, was the huge reduction in the tax rate. That was the biggest announcement which the finance minister has done, as we all see on that part of the issue. Vinay, my voice is clear and picture is clear? You are mute.
Sir, loud and clear, sir.
Okay, yes. So friends, this is an interactive meeting, and I can see, and this time, this being a special meeting, we have a added strength, and this is being streamed on the YouTube also, or I believe my voice and picture is clear, so that in case you have any problem in between, then please do send on the chat box, which is open, and I will love to have a few questions in case you later on have a few questions. As we normally see, when the budget is presented, it is time for the government to not only announce its fiscal policy, the tax rate also, but also to make certain amendment correction in the Income Tax Act. And my experience of watching this budget and sharing my ideas and thought, if I can just recollect, maybe now more than, I think, 40 years I have been doing this work. And I've seen each and every time the finance minister gives lot of agenda to people like me to speak. When she stand up in the parliament and she makes so many announcements, and this time one of the announcements when she was speaking was that she is going to present a direct tax bill, not the direct tax code, next week, which means that this budget may not have any amendment. But when I looked at the document, I could find 86 amendments have been proposed in the finance bill on the direct taxes itself. Now you can just imagine that a new direct tax bill is in the offing and is almost ready. I believe when the finance minister says that she will present it the next week, I believe it is only at the vetting stage with the approval from the cabinet, etc., to be formally moved in the parliament, and everything is ready for that, and it passed through all things, and still she makes 86 announcements. So now what should be the idea and what should be the objective? As I see, the next direct tax code bill is going to be just a summarization, simplification of the existing bill, and the finance minister has taken a call of making whatever the changes in policy are required one by one. We saw in the bill, which was in 2024 July, she made a lot of announcement about the capital gain, and she carried out a lot of correction. And this time I can see she has made a lot of correction on the tax deduction at source, when I will talk to you and I will speak to you on that part. Now, as I see, we need to start with the discussion on clause by what are the changes. First, let me go to the most important aspect which we all will be wondering about, is that what is this tax rate changes? We as a professional and those need to understand what this means, that a tax rate, there will be no tax on income up to 12 lakh rupees. And at the same time, she has made an announcement of the tax rate that up to 4 lakh rupees nil tax, 4 to 8, 5, 8 to 12, 10, 12 to 16, 15, 16 to 20, 20, 20 to 24, 25, and then 30%. So if the tax rate is at 5% from 4 to 8 lakh and 8 to 12 lakh is 10%, how come we are saying that there is no tax on income up to 12 lakh rupees? This is to be understood very, very clearly. These tax rates are applicable on individual, HEF, association of person, body of individual, what we call artificial juridical person. These are applicable on all categories. So these rates, concession of this up to income up to 12 lakh rupees is only to an individual and who is also a resident. So meaning thereby non-resident will start paying tax from 4 lakh rupees. HEF will start paying tax from 4 lakh rupees. AOP will start paying 4 lakh rupee. Tax rate will be 5, 10, 15, 20%. And for a resident also, this tax rate of not to pay any tax of 12 lakh rupees is only with a condition that the income is up to 12 lakh rupees. The moment this crosses the bar of 12 lakh rupees, this rebate will not be available because the Act says tax rate is there. Then there is a section 87A. I think we all may be knowing about this. Earlier, then there was a provision when income was up to 7 lakh rupees. So she has put a condition that from 5 to 7, 5% and 7 to 10, that condition 4 to 7, that 15,000 rupees rebate was there. Now that rebate has been increased to 60,000 rupees. So on an income of 12 lakh rupees, if I apply this rate of 4 to 8%, 5%, 20,000 rupees, 8 to 12 lakh rupees, 10%, 40,000 rupees, 60,000 rupees rebate is available with a condition that this rebate will not be available the moment your income crosses 12 lakh rupees. However, in order to give a marginal relief, what we call transitional phase, it cannot happen that when you have an income of 12 lakh, 10,000 rupees, you are required to pay tax of 60,000 rupees. So there is a marginal relief that in case your income is more than 12 lakh rupees, you will not be required to pay more than the income which is about 12 lakh rupees. So in case your income is 12 lakh 10,000 rupees, then you need to pay 10,000 rupees tax. If your income is 12 lakh 20,000 rupees, you need to pay 20,000 rupees. You need to pay, if your income is 12 lakh 30,000 rupees, you need to pay 30,000 rupees, and 40, 50, 60, 70. At 12 lakh 72,000 rupees around, this becomes neutral. So meaning thereby those people who will be earning income between 12 lakh to 12 lakh 72,000 rupees, entire income, that bracket goes to tax. This is to be understood. In addition, thereto, for a salaried class, there is a additional deduction of what we call standard deduction of 75,000 rupees. So if your income is 12 lakh 75,000 rupees, then 75,000 you will get a deduction. So there will be no tax on this part. Pension people also is eligible for standard deduction, so they will also get this benefit of 75,000 rupees. So there will be no tax on that part also. Now I believe, looking to the change in the tax rate, which earlier as compared to earlier rate and the present rate, I believe there is a drastic change in the entire scenario which has been worked out by the finance minister. She has given a lot of concession on that part. If you just look at how much advantage you can work it out, and what is, you would have been seeing the slide which have been appearing in the various TV channels, etc. That how much tax advantage you will get on that part. And I can just show you what is this, how much is the slide which is coming up. An idea can be had from this slide. How much new there is. If the old regime will still continuing, I am just comparing two things. Can you see this slide? Vinay, is this visible?
Yeah, definitely, sir. Please.
When the finance minister was talking about the saving, she was talking about the saving without the education cess and surcharge. Now look at this. A person who is earning an income of 12 lakh rupees, he is supposed to pay nil tax. The tax advantage is 83,200 rupees because 80,000 plus education cess, surcharge and education cess, the advantage come up on that part. Similarly, if the income is say 16 lakh rupees, the tax advantage get reduced to 52,000 rupees because earlier the tax slab was more than that on that part. Similarly, when the income is 24 lakh rupees, then you get a maximum advantage of 1,14,400 rupees, because your tax get a benefit of 1,10,000 rupees, and then thereafter there is a surcharge which you get an advantage thereafter. A person who has an income of 55 lakh rupees get an additional benefit, because after 50 lakh rupees there is a surcharge of 10%, that also will be saved. A person having an income of 2 crore 50 lakh rupees, he will be saving 1,43,000 rupees. This is the proposal which has been worked out on that basis. Can you have an idea on this issue? Now, if I take this to a logical, some conclusion on that part, so I try to do some exercise for the businessman and for the professional. Since many of my viewers are professional, I can just give you an idea. Now there is a section 44 ADA, which allows 50% deductions in respect of if you don't keep any books of account, etc. Assuming a professional has an income of 24 lakh rupees as the receipts, and he invokes 44 ADA. Now, I hope this slide you can see the first part, first column.
Yeah, please, sir. Yes, definitely.
48 gross receipt is 12 lakh rupees. Taxable income will be 6 lakh rupees. And the tax deducted at source will be 1,20,000 rupees, 10% on 12 lakh rupees. Total amount will be refunded, no tax. If the professional receipts are 24 lakh rupees, taxable income will be 12 lakh rupees under 44 ADA. Tax deducted at source will be 2,40,000 rupees. The total amount will be refunded. If the income is 48 lakh rupees, gross receipt is 48 lakh rupees, and the taxable income 50%, 24 lakh rupees, tax under the new regime will be 3,12,000 rupees, and tax deducted will be 4,80,000 rupees, and the 1,68,000 rupees will come back. And you will know that last year, this limit ceiling of 44 ADA was increased from 50 lakh to 75 lakh rupees. Now up to 75 lakh rupees, if the receipts are by check, not more than 5% in cash, then you are still eligible for opting for presumptive model of taxation, and then you can get a benefit of 50% on 36 lakh rupees. You need to pay 6,86,400 rupees, and assuming on 72 lakh rupees, 10% will be deducted. Now this will be a total win-win situation. So this is the big advantage which I believe is simplification. No books of account, nothing to be doing, and simplicity. And from the businessman perspective, if you can look at the other slide, the businessman perspective, this slide of businessman can 44 AD. Can you just show it? If my total turnover is 2 crore, which is possible, 2 crore, then 6% is considered to be the income, or if by check. And if it is by cash, then 1.5 crore, then it will be 8%, and then 12 lakh is the income, no tax. And 2 crore income will mean 66,000 rupees per day turnover. And 1,50,000, 1 crore 51 means 50,000, assuming 300 working days. So this is a big advantage which is coming out of the tax rate for the businessman, etc., opting for 48. And you will also know that this 2 crore threshold for 44 AD has been increased to 3 crore. So if I go to the 3 crore, then this will become 18 lakh rupees in 6% and 24 lakh rupees, and still the tax will be minimum. Now I believe now all shopkeepers who are having the turnover 50, 60,000 rupees per day, they will be the most happy people, almost nil income tax. That's a proposal which has come out on this finance bill. This is a big advantage which is coming out on the bill. Now, take a case. I try to work out some example of what can happen. If a person is getting a salary of 12 lakh rupees, or versus a person getting a professional charge of 10 lakh rupees, what you will like, whether you would like to be an employee or whether you would like to be a professional. If you are a professional, then you need to deduct, your tax will be deducted, and you will have to apply and get the refund. But if you get employed and you take a salary of 12 lakh rupees, 1 lakh rupees per month, no tax deduction, nothing to be done, no nil tax. This is the advantage which I am looking into, working it out, what will permutation and combination can be worked out. This gives another idea for me. Now, since the tax rate has been reduced and 25% tax rate is applicable on income up to 24 lakh rupees, if you are having a partnership firm or an LLP, now because partnership firm or LLP are liable to pay tax at the rate of 30% plus surcharge plus education cess, as the case may be applicable. But in any case, it will be 31.2%, even if surcharge is not applicable up to income of rupees 1 crore in the case of a partnership firm. And when individual is going to be taxed at the rate of 25%, it will be advisable for all professional and other people to amend their partnership deed or LLP agreement to make sure that the salary paid to the partners are in a bracket which is lower than this. Because you are paying salary than the tax rate. Because earlier income was beyond 10%, 10 lakh was chargeable to tax at 30%. So there was no advantage. On the contrary, income goes beyond 50 lakh rupees, then surcharge, etc. will be applicable. So keeping this in mind, we are in the month of February. This new provision will be a tax rate will be applicable from 1st April 2025. So you need to buy the new partnership deed document or stamp paper or amend the LLP document agreement from 1st April 25, making it effective so that the tax on the individual partner is comparatively less as compared to the tax which is on the partnership firm. So these are some of the implications which I have tried to work it out, professional versus on issue. Now, this takes me to another interesting issue. And here I am posing a question to all my viewers who are here. Because this exemption, this 87A rebate is not available against the long-term and short-term capital gain. Now, see the interesting situation which has emerged. Now, as per law, long-term capital gain is chargeable to tax at 12.5%, if I am correct, 112A. Now, short-term capital gain is chargeable at the normal rate. Assuming an example, a person is having a salary income of 6 lakh rupees, long-term capital on listed share 3 lakh rupees, his tax liability will be 39,000 rupees. His income is below 12 lakh rupees. Now take the same case. What happened in case he has a 3 lakh rupees of a short-term capital gain? The short-term capital gain will get taxed at the rate of 62,400 because this is chargeable tax. And now in this example, if you work it out, normal rate will be 20,800 rupees. This will be lesser than the long-term capital gain. Can we go back to the slide again, just to make the picture clear? If you apply this rate, 6 lakh, long-term 39,000 rupees. And if your short-term capital gain is chargeable to tax under section 111A, which is the special rate, you cannot get out of 20% and you need to pay 20% on that. But if your short-term capital gain is other than this, not on listed share, because under 12A or under 11A are on listed share, particular share, then this rate, this is a regular rate will be applicable. And if your regular rate is applicable, I will fall in the bracket 4 to 8, 5%, 20,000 rupees. And then that's the issue which it. And since this is a slab income coming, so I will be liable to pay this piece of tax. Now, this is the situation. And another example is on the income same. Can we go back again? Now, 9 lakh rupees salary income and 3 lakh around. This is 39,000 and this is 62,000 rupees. Your income is still below 12 lakh rupees, but still you will be required to pay tax because the finance minister categorically has said, these being a special rate, long-term, short-term, etc. So now my message on this point of tax rate is, we need to be cautious about planning your income. The moment you are touching up your income, you need to be very careful in which bracket you will file it. The only sideline which one need to be kept is non-resident are not eligible for this rebate and their tax rate will be 4 to 8% normal tax rate. This is the arithmetic which is working around on this issue. So I'm just giving an idea and thought about to you how the situation can be emerging on that part and the tax rate, etc. on that part. Now, friends, I can switch over to the some other provisions because I am touching up first those provisions which may be more of interest to you. Though I will then go by clause. The second most interesting aspect I can find it out, the change in the updated return. We all know there is a section 139(8)A which was introduced 2 years back, allowing updation of the return in case you have made any error or some mistake has been committed. You can correct it within a period of 2 years from the end of the relevant assessment year. If you do within a period of 1 year from the end of relevant assessment year, you need to pay additional 25%. If you do within a period of 2 years, then you need to pay 50% additional. Now this benefit is being extended to 4 years, that if you do beyond a period of 2 years, but less than 3 years, this will be 60%. And if you do beyond the period 3 years, but within a period of 4 years, then it is 70%. This amendment will be applicable from 1st April 2025. So meaning thereby, as on date, you can't do it. As on 1st April 25, 4 years will be available in respect of assessment year 21-22 only. Because 2021, 4 years would have elapsed on 31st March, you will not be eligible. As on date 21-22, you are not eligible because 2-year period is applicable, which has already gone out. So 21-22 will be eligible. We all know the conditions which are applicable for updated return. 143(2) notice should not have been issued by that time. 148 should not have been issued. In case of foreign income, AO would not have issued a show cause notice to you. Then such cases are not covered in that those cases where prosecution has been done. For that relevant assessment year can't go. Where information has been received under various Benami, what we call PML, etc. Then that year after show cause notice cannot be issued. But this finance bill has made a very interesting amendment. It says that you are eligible to file an updated return even if 148 proceedings have been initiated within a period of 3 years, but not beyond 3 years. So out of the 4 years, for 3 years, you can go for updated return. And 4th year, you cannot go into updated return. And as we all know, under section 149, beyond 3 year income exceeding should be more than 50 lakh rupees. So in case income has escaped assessment beyond 3 years and it is more than 50 lakh rupees, 148 can't come. If an income is more than 50 lakh rupees within 3 years, then you can opt for updated return. And how does it help you? The moment you get to know, the moment you receive that there is some problem has come up, you can file this updated return. Now, the benefit of the updated return is sometimes you believe that this 60 or 70% is more. But now with 270A sword hanging to underreporting and misreporting. Misreporting carries a penalty of 200%. So in case your case is falling in that category, because by and large, I believe income escaping assessment cases normally fall in misreporting. It's not underreporting only. If that be the case, it is an advantageous position to immediately go the moment you receive 148 notice or you have any information about this to opt for the updated return. Now, this will help increasing the, I think, voluntary compliance, and it's going to be a win-win situation from both sides, for the taxpayer side and for the other client. So after earlier, keep in mind, after issue of 148 notice, you are not eligible. Where 143(3) assessment has been done, then you are not eligible. Only 148 notice has been issued, but 148 has not been issued, you are eligible. So that's another point which is very interesting on the updated return. You can use this phenomena to your advantage a lot, and this is workable. And I believe this should open up. And 1st April 25 onward, you can look into the cases. I have tried to look into the search cases also. This can help in search cases also. The moment search is carried out, that person becomes ineligible for opting for this scheme. But the person other than the search person is become ineligible only after notice has been issued in that case. So in the search, normally people come to know that a person who has been searched, some other entry or some other information about the person other than the search person has come to the notice department. At that point of time, it will also be advisable after looking into the investigation, appraisal report, etc. If the other person's income is coming it up, it will be advisable to go for what we call is a opting for this updated return. I tried to do some arithmetic on that part also. Visualize the situation, because this new provision is going to come into effect from 1st April 25. Visualize the situation, a search is carried out in October 2025, and something is found relating to assessment year 23, 24, or 24, 25. Now, under the new law of the search, 60% tax is payable, no penalty, etc. You are absolutely free under the new law. Now, under this law, if it is within 1 year, then you are paid to pay 25%, and you can still get out of it. So you need to make somewhere calculation arbitrage where you will get benefit. Because first year, if it is within 1 year, it is 25%, within 2 years, it is 50%, or it is 60%, but interest, etc. But in the such cases, what is 153 or 153 or gone, but the mechanism the same. The existing provision said straight away 60% tax, whatever you pay on the undisclosed income, nothing more, nothing less on that part. I believe that's an advantage, and you need to look it into that aspect. But other than the such cases, it will be always advantageous because 148 concealment penalty and the prosecution interest, etc., that is far more draconian. So if one has to look into those circumstances where you will get benefited on that part. So this is another advantage which has come on that issue. Now, friends, there are certain other amendments which I can just rush through for the purpose of your understanding on that part.
Sir, this issue that you raised, that updated
No,
return.
we will take question later on. I think that
Noted. Well noted. Well noted.
now, like looking to the certain other amendment, there are two amendments on the charitable trust. My experience says I have not seen a single budget in the last 30 years at least where provision relating to charitable trust have not been amended. But fortunately, this time, two amendments have been made. Both are in favor of the assessee rather than against the assessee. There is a relaxation which is given on that part. Now, as we see, a charitable trust is supposed to apply for a registration, provisional, and then regular registration, etc., in order to mitigate the hardship of these small charitable trusts. In case your total receipt, gross total income before exemption under section 1112 does not exceed 5 crore rupees, then you are eligible in the two preceding year, then your registration can be instead of 5 to 10 years. There is another advantage which has been given on that part is that as per the section 12AB, the director of exemption or the commissioner of income tax exemption, as the case may be, the designation depending on the location, is entitled to cancel your registration in case the application which you have filed was incomplete. Now that clause is being deleted. Now that even once your registration has been granted, even if your application was incomplete, so that cannot be a ground for cancellation of registration. This has been rightly done because later on you can always say you have not filled in this column or you have not provided this information. However, registration can still be cancelled in case the information provided in the application was false or incorrect. So make sure incomplete, there is a difference, incorrect, false, there is a difference on that part. Second amendment is regarding section 13(1). You will all know that under section 13(1)(c), payment to such specified persons, etc., is a restricted mechanism. You cannot make a payment, you cannot give any benefit to them, or you can just provide, you say, a reasonable payment for the services or the goods, whatever you purchased or provided for. Now, there have been a restriction even on those persons who have contributed. They may not be trusted, they may not be any beneficiary at all, whatever it is, but still if they are contributed, because the law presumes that those who have contributed more, they should not be given benefit. So existing law says, in case anybody has contributed more than 50,000 rupees till the date of the date, that person is considered to be a specified person and you cannot give any benefit, etc., to that person. Now that is being increased from 50,000 rupees. That ceiling is being increased, and similarly, the ceiling is 1 lakh rupees during that year. Earlier was 50,000 rupees on that part. Our ceiling is 1 lakh rupees during the year, and 10 lakh rupees in the aggregate up to that previous year. So that's a big exemption. Similarly, relative of such person is also being getting out. Similarly, any concern in which he has a substantial interest, that is being also taken out. They will not be considered as a specified person. So these are the amendment in the as far as the charitable trusts are concerned. Now coming to the salaried employees, a lot of benefits are being worked out on that part. Two clauses are being amended, empowering the government to specify by rule. As on date, any perquisite given to the employee which are specified in section 17(2) is taxable, chargeable to tax. There is a residual clause in 17(2) subclause 3, which says any benefit, any amenity given to a director or a person who has a substantial interest, or to an employee whose salary other than the non-beneficiary benefit is more than 50,000 rupees, will be chargeable to tax. So this 50,000 rupees was kept long time back. So now government think that this time has come to revise it, and they don't want to put in the act, and that's why they have taken a enabling provision that as may be specified, so they will specify in the rule a substantial increase. This should help the, I believe, middle class employee. Similarly, under the 17th package, it is not chargeable to tax in respect of the certain specified disease treatment. Even if the person has employee had to be taken abroad, and then traveling expenses of the patient employee and the relative is exempt, with a condition that a total salary of the employee should not be more than 2 lakh rupees a year. Now that is also being amended so as to extend the benefit to the such employee that this threshold will get will be specified, and over a period will get increased. This is the change which is happening on the part. Now, when we are talking of this employee structure, let me come back to the tax rate again. When we were talking about the tax rate, you will be knowing that now no exemption and deduction is available under the new regime. Old regime, in any case, now nobody will pick it up because 80C, 80D, all benefit, housing loan interest, etc., no exemption will be available under the new regime. Old regime, if you go after taking a rebate, you will be paying higher taxes on that part. Now, what should be done for an employee? I just try to apply my mind that instead of taking some benefit from the company in the form of some allowances or etc., for which I should claim a deduction, why not I take certain non-monetary benefit which get valued at a lower rate? Now, if you get a house rent allowance of 40,000 rupees under the new regime, you will not get any deduction under section 1013A. You are not will be entitled to. But if you take a rent-free accommodation, you will get a benefit, because the rent-free accommodation will be chargeable to tax at 10% of your salary only. So you get an additional advantage. Similarly, in case you take a car allowance or vehicle allowance, you will not get a benefit because under the new regime. But under the new regime, these cars are taxed at a very concessional rate, 1,800 rupees per month, and then 900 rupees for the chauffeur. All expenses to the account of the employer, and you are entitled to use for your private use and for the official purposes also. So whatever you can do is monetary benefit. Instead of taking a monetary benefit, you can take non-monetary benefit, which per kg value get taxed at a very concessional rate. So you can think about it when you are doing a tax planning for yourself or for your client on that part, on the issue. The next amendment which I can talk about is the Section 23, what we are vacant house self-occupied property. We all know that post amendment in 2000, now in case you have a house property which you are liable, even when you are vacant, you are liable to pay tax on the annual letting value. So one property self-occupied has always been exempt. Now 2 years back, 2 houses were exempt, but there was a condition attached there too. The second house you could not occupy mainly because of your employment or because of your business or a profession. Now this amendment proposes that this condition that you could not occupy because of your salary or because of your employment or because of your business or profession will not be required. You will ask what the change is. This is a big change. Because when the condition was that you could not occupy the second house because of your employment or because of your business or profession, which means that you must have a salary income or a business or profession. Those retired people who are having income from pension, those who are having income from rental, housewife or other etc., they were not eligible for second house. In that case, annual letting value. Now, each and every individual will be eligible for 2 houses, no annual letting value. This has become a really very, very problematic, and I believe now this is going to solve a lot of problem on that side, on that point. Fortunately, as I said, the finance minister is going to present the new finance code. So no changes have been proposed so far business income is concerned. Only a new section has been incorporated, section 44 BBD, for presumptive model of taxation in respect of the services provided in facilitating or setting up of a manufacturing facility for electronic goods or producing electronic goods or article. In that case, whatever the amount is paid to the non-resident, 25% will be considered to be the income of that person, with no deduction or no exemption under any other head of the income on that part. Then there are certain consequential changes, which are certain corrective changes. We all know in the case of a merger, a company getting merged into the another company under 72A, unabsorbed depreciation or losses, etc., become the unabsorbed losses of the other person. Now, as per the existing provision, once a merger takes place in the another company, now you get an additional period of 8 years. Now the law is being amended to provide you will not get additional period. It will only the balance period available to that entity that will be allowed to you. That's, I believe, a change which has been done. So 72A and 72AA both have been amended on that part. Then there are extension to what we call this startup, because startup cutoff date was 31st March 2025 for getting an exemption under Section 80 IAC. Now that period is being extended to 31st March 2030. Similarly, offshore banking set up in IFSC, International Financial Center, because I have not seen in the last 12 years, not a single finance bill where at least 10 amendments are related to International Financial Center, which we call a GIFT City in Ahmedabad. This bill is no exception. Lot of amendment has been made. This present amendment, which I am talking about of Section 80LA, is regarding extension against on the line of the startup from 31st March 25 to 31st March 30. Lot of offshore banking company has been set up, so their income will be exempt on that part. On that issue has been worked it out on that basis. So these are some of the exemption which has been worked out on that part. Now I can go to some of the other changes which may be of interest on that part. Regarding search, you will know that Finance Bill 2024 number 2 has put a new mechanism of computation, a new mechanism for the search cases. In respect of search carried out on or after 1st September 2024, straight away 60% tax is applicable on undisclosed income. So there are 4 and 5 amendments which have been made, but I believe all those amendments are just a corrective amendment. Some computation mechanism they have missed out, that has been corrected. Period which they were the definition, that has been amended. Digital asset amendment, that has been amended, but no substantive change. So all search after 1st October will be the same only. Then there is a small amendment in Section 270AA, which gives an immunity in case you accept the assessment order and where addition is of underreporting, not misreporting, you can get out of the immunity and penalty and prosecution. The period available to the AO to dispose of the application was 1 month. Now that period is being extended to the three months on that part. Similarly, now for cryptocurrency, etc., those people who are running a platform, they will be required to now file an annual statement giving detail of the transaction of the people of the customer, which they have worked it out on that basis. So that is the working which has been done, and that one need to file on that basis also. Then there are small changes in Section 132B regarding retention of the books of account post completion of the assessment, that has been given power. Now, substantial changes are on tax deduction at source. Substantial changes are there. Rates have been reduced on that part. Can we go to the slide? We have a slide? No. Now, what do you see? One is 194A. 194 as on date for senior citizen, if you receive an interest from bank and cooperative society, 50,000 rupees, no TDS. For other 40,000 rupees, normal circumstances, other than bank and cooperative society, 5,000 rupees. For senior citizen, it is being increased from 50,000 to 1 lakh rupees. For individual, 40,000 to 50,000 rupees. And from other than bank, etc., it is from 5,000 rupees to 10,000 rupees. That will increase. Similarly, deduction of tax at source 194J is being increased from 30,000 to 50,000 rupees. We all professionals should be happy on that part. Now that up to, in case you receive a payment up to 50,000 rupees from your client, etc., there will be no TDS of the financial or year. Similarly, on commission and brokerage, the rate is being increased from, the threshold is being increased from 15,000 to 20,000 rupees. Dividend 5,000 to 10,000 rupees is being received. 193 interest on security, there is no exemption as on date. Threshold is being fixed at 10,000 rupees. But interesting aspect is, you would have heard the finance minister that NSS deposit, which used to be long time back, from 29th August 2024, it has been put an end and no interest will be payable. But now if you withdraw it, because that scheme used to say, as and when you withdraw, income will be chargeable to tax. But now it is being said, when you withdraw, there will be no tax. But somehow the other, the finance minister has forgotten to amend the corresponding provision of the TDS, which is applicable in such cases. I hope she will take care and she will amend the section on that section. But interestingly, one thing which I could work it out, 194C has not been touched. I could not make it out. When you are increasing simplification, you are doing it. Why not this? Because now, as on date under 194C, if you have 30,000, there are more than 30,000 rupee transaction, you are liable to deduct TDS on that part. And then aggregate amount also, there is a ceiling also. Why not there is an increase in 194C on that part? Similarly, 194T, which will be applicable to all of you. You will know that last year a bill has been introduced, amendment has been made, 194T, payment of remuneration to the partner more than 20,000, it is liable for TDS at the rate of 10%. This provision is going to come into force from 1st April 2025. So financial year 24-25, it is not applicable, so we are all happy. But financial year from 1st April 25, it will be applicable and threshold is only 20,000 rupees. I pose a question to myself. When you are exempting income up to 4 lakh rupees, no tax on 12 lakh rupees, then where is the need to deduct tax at source on remuneration of more than 20,000? Why not a corresponding amendment? Because everyone will either get a refund or will be standing in the queue with the department under section 197 to seek lower deduction certificate. As I said earlier, when I was explaining the provision of this, tax rate, that you need to amend your partnership deed from 1st April 25. You need to amend LLP on the remuneration has to be increased to the partner so that your tax liability get reduced, because your partner will be going to be taxed at 5%, 10% or 15%, 20%. Some of professional charges may be there, because then you get a rebate depending upon the situation. There can be two situations. Up to 12 lakh rupees, salary will be much better because no TDS. And beyond 12 lakh rupees, it will be much better to have professional charges to your employee, because you get a 50% rebate and then that's why pay lesser tax. So take a case, 12 lakh rupees salary, no TDS. 12 to 24 lakh rupees, better to go to the professional charges, take a 50% rebate, no tax, but TDS will be there. That's the only issue. So this TDS. Now the most interesting part, which finance minister also touched upon the budget speech, rent. Existing provision said on payment of income by way of rent, you need to deduct tax at source. But you need not deduct tax at source if the aggregate amount paid during the year is not exceeding to rupees 2,40,000. Now what the new law says? You need not deduct tax in case the rent paid for a month or a part of month does not exceed rupees 50. Is it helpful or is it some problematic? If you are paying 40,000 rupees per month, every month there is no tax. But in case you pay 51,000 rupees for a 1 month, you will be liable to pay tax, TDS. Irrespective, now you will not get 2,40,000 rupees. You cannot compute 6 lakh rupees. It is 50,000 exceeding 50,000 rupees month or part of the month. So in case out of the 12 months, even for a month, 1 month you have paid 51,000 rupees, your liability for that month will arise for that month. This is the change which has been affected on that part of the TDS. Then there are certain other changes which are important. No prosecution for TCS also on the line of TDS also. As you know, in the finance bill last year, she has announced that in case there is a default in payment of TDS, but that default has been complied with after paying tax and interest before the due date of the financial statement, meaning that quarter itself, you have paid it finally, then prosecution will not be launched. Somehow we have missed out TCS, so now she says for TCS also there will be no. Similarly, now what is being said is there is a TCS provision applicable in respect of sale of goods, because you need to, on sale of goods, you need to collect TCS. At the same time, there is 194Q, which says at the time of purchase of goods, you need to pay a payment. Now, TCS on sale of goods is being removed altogether. Some definition of forest produce is being amended so as to give us some relief. What is the forest produce and what is the timber on that part on the issue. But one more important amendment which has been made is that while deducting tax at source or while collecting TCS, there are two provisions which creates a challenge. That in case the deductee or the collectee from whom we have to collect is non-filer of return, then the tax rate goes up. Because then the tax rate says whatever is the normal tax rate in force, 5%, and that's a double the rate you have to apply to that. Now that provision is being deleted, and they say this has become cumbersome. People are not able to get the information whether the person is filing the return or not filing the return. So that's why that provision is being taken away and deleted on that part. Friend, these are some changes on the issue. Then there is some interesting amendment on the levy of penalty and the limitation, which we need to talk together on this. First, I talk of the penalty. Now, as on date, you will know that there are various penalty provisions, which are 271C, 271CA, 271D, DA, DD, and DE, 271E. These penalties are to be imposed by Joint Commission or Additional Commission. Now, the Act proposes, the bill proposes that these penalties can be imposed by the assessing officer itself. Now, this is the penalty provision which can be imposed. But then there is another provision in section 274(2), which says that in case penalty imposable is more than 10,000 rupees, then income tax officer cannot impose the penalty without the approval of the Joint Commissioner. In case the penalty imposable is more than 20,000 rupees, then Assistant Commissioner or Deputy Commissioner cannot impose the penalty without the approval of the Joint Commissioner. These provisions will still continue to exist. Now, with the result, what will happen is that income tax officer or the Assistant Commissioner or the Deputy Commissioner, they will be in a position to impose the penalty. But since almost in all cases penalty is more than 20,000 rupees, he has to seek an approval from the Joint Commission. And this approval has to be granted after due application of mind. Similar provision is there for such cases that assessment cannot be completed without the approval of the Joint Commissioner. Now, various courts have taken a decision that this approval cannot be mechanical. This is not an administrative approval. This had to be due application of mind. So I believe now the same dispute will start arising on that part. Assessing officer will be in a position to levy penalty, but with the approval of the Joint Commissioner, and that approval has to be on the basis of the application of mind. Now, when I am on penalty, section 275 existing is being substituted by the new section 270. And now the provision is being amended to provide that what will be the limitation for imposition of the penalty on that part. Now, as I see, normally in every time there is some philosophy. Earlier there used to be a limitation start from the date of the order or date of the notice, whatever it is. Then the mechanism came from the end of the financial year. Then it came from the end of the month in which the order is passed. Interestingly, in this budget, finance bill, there is a new phenomenon, end of the quarter. From the end of the quarter period has been worked it out. And now the law has been being amended on limitation is, there are three parts. In case there is an assessment order or an order where penalty is initiated, that penalty limitation will be 6 months from the end of the quarter in which the penalty is initiated, in the course of which assessment penalty is initiated. So assessment order, you will get March order, September, where no appeal has been filed. But where an appeal has been filed with a CIT appeal, then it will be 6 months from the date when the jurisdictional commissioner gets an order of that appeal. And similarly, in appeal, when the appeal has been filed with the ITAT, then it will be again a 6 months from the judicial commissioner getting order. So these are the changes we had made. In case where penalty is being initiated, not on the basis of an assessment order or something like like 269 SS, 269T or 269 ST, etc., 270D, D, etc., which had nothing to do with the assessment order. It is from the date of issuance of the notice. From that period has to be counted on that part. Similarly, in case penalty enhancement or where penalty has not been imposed and it is consequential to the CIT appeal order or ITAT order or an order of the 263, 264, same limitation period will be applicable from that 6 months from the when the principal commissioner or the judicial commissioner receives the order from the. That's a limitation period which has been worked it out on that part. Then there are certain other small correctional error. One is ULIP, etc., unit linked insurance plan. It has been clarified that this will be considered capital asset and it will be treated capital asset. So that condition of 4th and 5th proviso, which was there, is being deleted at the various level. Similarly, there are certain amendment regarding the stay period when the order is stayed by the court. The court view has always been the day court order is pronounced, from that day the limitation comes to an end. Now it is being said not from that day, it will be from the date when the certified copy of the order is received by the judicial commissioner. So I believe that's it, to remove confusion and to be on a safer side, the department has worked it out. Frankly speaking, I will see with the computerization and digitization, period should not be extended, because then you get an extended period and extended working it out. On one side, you have reduced so much period for filing return, for filing revised return also. With the result, I believe in current assessment year, you cannot file the revised return. December is the last date, not the March. And if you want to go beyond December, you need to file a updated return. So that's the area which has been worked it out on that part. Now, friend, there are certain amendments regarding the non-resident aspect also. I will just read 2-3 amendments. One is regarding business connection. So there have been certain disputes going on. When a person buys goods from India for the purpose of export, then whether it can be called a business connection. So it is being clarified. Simply one buys goods from India, and then it cannot be considered to be a business connection on that part. Then on transfer pricing, section 92 CA is being proposed to be amended to give it a wet split. Now, in case there is an arm's length price determination, now it can be for 3 years. If you have done in 1 year, that can be applied to the subsequent 2 years. I believe this is something to do on the same line as we have advanced pricing agreement, where this you can enter into advanced pricing agreement and you can use it backward also. That was a rule. Now, similar line, I said TP study, TPO report having come into 1 year, you can apply into the subsequent 2 years. Though there are certain, I believe, teething issues which are likely to arise on that part, on that issue, on that part. Some friends, I have not touched on the part of the shipping industries, aircraft, etc., where certain benefit has been given to the shipping industry, tonnage, etc., we have given, and some concession which has been given in respect of gift city, will be working it out on that part. I believe these are the main, I think, provision which I believe amendment is there. We need to wait for the new finance bill, which is a new income tax bill, which is likely to be coming in the next week, and we can have our discussion. Now I will give it over to the Vinayji. In case there are few questions or time available, I can take a few questions on that or clarification in case it is required.
Thank you, sir. Thank you for it's absolutely
I need to just clarify, Mr. Ramaswamy. I think my dear friend and past president from Coimbatore has joined. He has asked a question: what is the time limit for issue of a notice in case of unconnected? Unfortunately, there is no time limit now. It says the time limitation will start only from when the issue of a notice, but there is no such mechanical provision provided in which period this notice can be issued. In case an 271D cash payment, etc., after 2 year notice is issued, whether that penalty notice will be valid or not, it has to be tested, because then general principle will be applicable. I can still recall some of the old judgment which has been on the TDS matter, because there was no limitation period in TDS. Then the court has read 4 year period as a reasonable period. NSK Japan, I believe that's a judgment which is there. But I think for issuing a notice, limitation may be a challenge, and time period has to be prescribed, which is presently is not there on that.
Thank you, sir. Thank you very much for this wonderful presentation. I am really benefited out of it. Thanks for nice presentation. It's like I'm sitting in the council hall. I'm hearing like you. Thank you, sir.
Over, Vinayji, please.
Yeah, thank you. And I'm delighted to thanks my past president G. Ramaswamy ji also. So thank you very much. Thanks. I mean, it is a great occasion to see you on this platform and keep visiting, and it's wonderful. Thank you very much, and thanks CA Ved Jain ji.
नहीं सब क्वेश्चन 2-4 क्वेश्चन एक दो
हाँ.
आए वो ले लीजिए अगर 5-10 मिनट लगा के if you can take this few question.
Definitely. It was a nice deliberation. Before we take the question, like definitely there are a lot of chats questions are there. So I'm starting from the last is since been addressed of the question of G. Ramaswamy ji. Then Anuj Agarwal ji and many other professional probably has a common answer question. Is the sir, I think TDS under section 194J is now if payment exceeds 50,000 per month. Earlier it was 30,000 for the year.
50.
50. It's a 50 now. It's 50. 50,000. Yes.
The question is per month. I think it is still per year, not per month. The question was regarding per month.
Per year है per month नहीं.
Question was per month.
No. Not per month.
नहीं
पैसे चार्ज में कोई पर मंथ का कोई इशू नहीं.
हाँ.
रेंट में पर मंथ है बाकी कहीं पर मंथ का कोई इशू नहीं किसी में प्रोविजन पर मंथ.
Now the other question is please guide about on TCS threshold limit. I suppose threshold limit only there is one change. I suppose there's in case of sale of goods only that have been removed and rest is same. I suppose there is no change.
No change. Only TCS has been removed on the sale of goods. When you make sale of goods, you are supposed to collect TCS with a certain condition. What is your turnover and what is the other person turnover? So on that basis, but that section itself has been removed.
Now the question.
No, sir. No, sir. TCS on education and what 10 lakh ki limit.
Yes, I got it. You have some different point. TCS on LRS. Now the threshold has been increased from 7 to 10 lakh rupees. In case the education loan had, in case of educational LRS, but it is fully financed from the financial institution, then no TCS. Otherwise, of course, 5% will be applicable beyond 10.
Yeah, thank you. And now the Vinay is asking one question. Vinay Gupta ji is capital gain up to rupees 1.225 lakh per year.
It continues. It is available. There is no issue.
It will definitely continue. That in any case, it is beyond 12 lakhs. If you have 12 lakhs and then 1.25 still as in capital gain, then
no, just be careful. If you have a capital gain long term 1.25 only,
true.
Then you are found. But if you have a 2 lakh rupees on 75,000 rupees, this 20 lakh rupees will not be available.
Fair enough. Within clarification, what if the income? This is Ankit Agarwal. Ankit, you can raise your query. Otherwise, I can read it. What if salary income is 12 lakhs and the LTC is 3 lakhs? That's I suppose. ये तो उसमें जो स्लाइड थी उसी से क्लियर हो गया था I suppose. अंकित, am I right? अंकित.
Yes sir.
वो तो उसे क्लियर हो गया था ना भाई?
सर एक क्वेरी थी. सर ने कहा था कि 148 का नोटिस आया तो हम अपडेटेड रिटर्न फाइल कर दें.
No, 148A.
148A का नोटिस आया?
No, not 140 because the law says now there was a doubt about it. What happened in case 148A notice has been? Fortunately, this finance bill clarifies that you can file an updated return in case 148 has been not beyond the period of 3 years. Meaning thereby within 3 years you can file. Mute, please mute. I think somebody is speaking. You have to mute that.
Sir, in one of my case, I filed an updated return. Not updated return. Return is response to notice under section 148 after the proceedings came. और उसमें donation वाला issue था. हमने donation का claim फिर withdraw कर लिया था. Then we paid the tax, applicable tax interest. When the process came for penalty proceedings, we took the argument that return filed in response to 148 is as good as in
Not agree with you. What do you want? The absolutely case of a misreporting of it.
Sir, वो case हमारा वैसे वो निकल गया था.
I know because instructions are internally and many people have got misguided. So take a lenient view. That's why the department has been asked to accept the return as it.
तो सर क्या ये इशू अपडेटेड रिटर्न में भी नहीं आएगा? फिर डिपार्टमेंट विल से कि हमने तो, अरे नीरज सर, नीरज सचदेवा जी,
विनय जी आप अनम्यूट कर लो अपने आप को, बाकी सबको म्यूट करना पड़ेगा क्योंकि
सर सर
हाँ, सर।
थैंक यू सो
एक मिनट
मच
एक मिनट एक मिनट एक मिनट सचदेवा जी, एक क्वेरी चल रही है अंकित जी की, उसके बाद आप ले।
ओके सर
तो क्या सर डिपार्टमेंट अपडेटेड रिटर्न में भी ये नहीं बोलेगा कि आपने तो हमारे नोटिस के बाद ये क्लेम हटाया है, तो इट इज अ मिस रिपोर्टिंग?
नहीं वो तो अलाउ कर दिया तो फिर
एक बात देखिए, जो लॉ में कंसेशन इज गिवन इन लॉ, it means that the government wants a compliance, because the idea is to increase voluntary compliance. Now over a period the government has realized nothing can be better that in case assessee comes himself and pays the tax and additional tax. Now in case 140, after 148, ultimately you will, what you will do? So I believe that's why I was just giving an example. It's a win-win situation. Within a period of 3 years, you are eligible to file an updated return on, and beyond 3 years, beyond 50 lakh rupees, you can't do it. So that's way it's a good way to reduce litigation and encourage the taxpayer, in case he has committed a default, to come forward and pay taxes and get out of it.
this is a sort of
I will say, frankly, just a minute. Somebody, I think, I will say that this bill, Neeraj ji, please, you are right, please.
सर एक क्वेरी थी मेरी।
Let me clarify. This bill, finance bill, shows that the government is working very open-minded and with a liberalized view to redress the dispute and work out a mechanism where these tax issues can be settled amicably. So on that basis, I am getting encouraged by one effect from this bill, that the income tax bill, which is in the offering and next week will be coming up, the same mindset will be applied there also, and there will be enough gateway opened up for taxpayer and tax administration to come and settle the issue. Now, after 148, what you do? You levy tax, you interest, and then penalty. Now, updated return itself is a penalty. You pay 60%, 70%. That's a penalty you get out of it. That's the idea. Now, I think we can take a question.
So the larger point is, it is a permanent amnesty till the time further amendment comes into this particular.
I believe now, Vinayji, you are going beyond. Don't use the word permanent amnesty. Amnesty, it is not. You see, that's where the problem. You see, the question is, the mindset should be open and a liberal mindset, because in such a complex economic environment, there are bound to be certain dispute which either side can commit. And that the best way is to levy tax and interest and move forward.
Yeah, Arunji, the question being raised by you is the TDS limit on rent is 50,000 per month or 6 lakh. It is since been explained, it is 50,000 per month and not a 6 lakh per annum limit ceiling, since it's been taken away. It is a per month 50,000 threshold which you need to.
My question is, if it is paid in advance,
I can read out the exact wording which has been there. You are liable to deduct TDS under section on income by way of rent, and the proviso which is being inserted and substituted is, provided that no deduction shall be made under this section where the income by way of rent credited or paid for a month or a part of month by such person to the account of the payee does not exceed 50,000 rupees. So this is a law for the moment it exceeds 50,000 rupees, liability will arise, and you for that month you have to deduct TDS. There's no issue.
in that case, anybody make the payment, advance payment of the rent for whole of the year, he has to deduct TDS.
Yes,
because rent is 50,000 per month.
Because law on TDS is very clear, credited or paid, whichever is earlier. And I believe there is a very good circular issued way back in 1995. You can read out the circular. It gives a very clarity about the rent. When you pay, say, you take a premises on rent for 3 years. And if I take an example, you take in the month of July 2025, and you pay a total rent of, say, to that person, assuming 9 lakh rupees per year, 27 lakh rupees. You need to deduct 2,70,000 rupees and deduct rent. And the other person is supposed to take a credit on proportionate basis, July to March, next March to April.
ये हो गया सारा वो
And circular goes to
Sign करने
extend
के-
to that extent that in the third year,
Sir, इसको म्यूट
in the third year, if the owner sells the land property, then who will get the credit? Then they say the credit will be given to the earlier owner, and in that year in which the sale has taken place, he can claim the full amount.
That's correct, sir. I agree with this one, but only the concern is because the rent is less than 6 lakhs rupees in a year, where the TDS is not going to deduct it.
The 6 lakh figure is not there, nahi?
So I
No,
can
no.
I can
नहीं सर इनका सवाल ये है
अब मैं समझ गया. I can answer it. If you are say 40,000 rupees per month is the rent, and 3 years rent you pay say 14,40,000 rupees in one go.
I am for 1 year only, sir. I am for 1 year.
How much you want to pay?
4,80,000 rupees.
Then you need not deduct, obviously, because the rent for per month is less than 40,000, 50,000.
Right, sir. That was the question, and it is well answered. Thank you, sir.
नहीं, लेकिन जैन साहब आपने जो लैंग्वेज पढ़ी है उसमें पर मंथ वर्ड इज नॉट देयर. इट इज सेड कि 50,000 you've been credited 50,000. So per month word is not there.
I will read where the income by way of rent credited or paid under the month, a month or a part of month by session, paid for a month or a part of a month.
It will be 40,000 rupees only.
Okay, fine, fair enough. Now the question is, few question I'm taking from the starting. Narendra Rustogi ji, please
जैन साहब 1 मिनट मेरे को देंगे एक पॉइंट थोड़ा सा अगर if you permit.
हाँ जी लीजिए.
जैन साहब ये 87A में जैसे बात हुई है स्पेशल टैक्सेस के इनकम पे रिबेट नहीं है. उस पे एक छोटा सा पॉइंट मैं थोड़ा सा हाईलाइट करना चाहूंगा. सपोज STCG is 20%. That is only if there is STT. If off market कोई सेल कर देता है, he can say that STCG 20%.
That is your choice. You can do it. No issue.
ठीक है.
ठीक है जी, बढ़े आगे.
No issue. But then there is no special rate. Then there is no issue.
सर एक क्वेरी थी अपडेटेड रन को.
That's why I say chartered accountant mind is very fertile, na? Very innovative.
नहीं सर वो जो जिसने खरीदा है वो भी फंसेगा बाद में, उसको स्पेशल रेट नहीं मिलेगा.
हाँ
तो सर गेन भी नहीं होगा ना. करंट रेट पे 2 दिन बाद बेच देगा वो, उसको गेन नहीं होगा ना सर. जिसको एसटीटी लगेगा उसको तो गेन नहीं होगा ना.
जी, I think we should finish it off. Satish ji must be waiting. I believe.
सर एक अपडेटेड रिटर्न को लेके क्वेरी थी. सर रिटर्न फाइल नहीं के 148 का नोटिस आ गया. इनकम बिलो टैक्सेबल है, टैक्स कटा हुआ है, तो 148 में जो असेसमेंट प्रोसीडिंग है उसमें रिफंड देगा?
नहीं, 148 पर रिफंड नहीं मिलेगा. Your income will be assessed and ultimately will drop.
नहीं अब अपडेटेड में तो थोड़ा सा पे करना पड़ता तभी अपडेटेड.
I will tell you, I have not dealt in detail today because amendment is only for 3 to 4 year extension period. There are 3 conditions attached to the updated return for filing. It should not be a loss return. It should not result into a refund. It should not result into increasing a refund. So it is for the benefit of the department only. It is not for benefit for the SSC. You cannot use this model as a revising the return or making a claim which you have not made. It is only for purpose of updating the mistake in not paying the taxes. Is not a mistake of not getting the refund.
नहीं सर, मेरी क्वेरी में एसएससी ने रिटर्न फाइल ही नहीं करी. डिपार्टमेंट ने 148 भेजा, इनकम बिलो टैक्सेबल है, टैक्स कटा हुआ है.
In case you intend to claim a refund, you will not be. Because the law clearly says, if you can just read, if you have the book on your table, just open that page of 139.8a. It categorically says it cannot be filed for claiming a refund. And when you say I have a refund, then you are filing for claiming a refund.
Sir, what if the direct notice under section 148 is issued? That means in cases when 148A is not applicable.
Then you're out, because 148 is there, the assessment is pending.
In that case, can contemplated return.
नहीं
My
उसमें
question
क्या
is this
था?
one.
अरे नहीं,
I understand in such cases, because he talking of the search before 1st September 2024, where in view of the explanation, notice have been issued directly without opting for a route of 148A. Then the moment you issue a notice, in such person is out, otherwise out from the updated return. It categorically says that such person cannot file a return for that year and preceding year, assessment year.
सर ओरिजिनल रिटर्न के अंदर अनअब्जॉर्ब कैपिटल गेन लॉस था और जब अपडेटेड रिटर्न की तो एक कैपिटल गेन छूट गया था डिक्लेयर करने में, उसमें कैपिटल गेन को जो अनअब्जॉर्ब लॉस था उससे सेटअप मिलेगा या नहीं मिलेगा सर?
नहीं, इट शुड रिजल्ट इनटू समथिंग प्लस टू
प्लस ही है सर, वो प्लस है सर,
मिल जाएगा, फिर मिल जाएगा समथिंग प्लस।
143(1) जो अपडेटेड रिटर्न्स का है उसमें वो सेटअप नहीं दे रहा सर।
I do agree, but setup तो दे देगा, लेकिन but plus होना चाहिए something.
हाँ प्लस है सर, प्लस में टैक्स जमा हुआ है सर, but somehow they are not giving a plus setup of unabsorbed loss of that original return.
मिल जाए, should.
Sir, I have a query. Can I ask one query, please?
Please go ahead, sir.
Thank you so much. Namaskar, sir. Thank you so much for such a nice deliberation. My query is with respect to the proposed amendment with respect to section 13(3), in which it is said that the details of their relatives and concerns with respect to a person who has given a substantial contribution will not be required to be given. Now, in case an HUF gives a substantial donation or substantial contribution, will this requirement of giving list of relatives of members and the concerns where members have substantial interest, will that be required to be given or not?
If I have understood it correctly, you mean to say that in case a contribution has come from HUF.
Certainly, yes.
Contribution has come from HUF. Whether the member of HUF will be considered to be the relative of the HUF, so as to be falling within the meaning of the specified person to hit at 13(1)(c.
No, he'll be considered as a relative, specified person. He will not be given the benefit. But now, in case the HUF is a different, person.
I got your person. You mean to say HUF is a different and that members are different. So the member should not be considered as a specified person for 13(1)(c). I believe that is a query.
Yeah. Now, in this amendment, what they are saying is that it becomes practically not possible to give list of relatives of that particular person. Now, in case HUF is giving that substantial contribution,
do you have the income tax with you?
Yeah.
Can you open page number 1.225?
No, 13(3), section 13(3).
Where such author, founder, or person is HUF a member of the family?
Yes, it is there in C clause.
Then?
Now, they will be specified person, I do agree. But in case the HUF is giving some different HUF, not the HUF of the author or founder.
I agree now with your that's why I repeated your query just to make it out again to clarity. You mean to say if the HUF has been contributing the amount,
yes,
and then member of the HUF will not be considered to be 13(1)(c) because member is not being a relative is now outside.
Member will be considered, but relative of members and the concerns where these members are having substantial interest, then it will become the same thing. Because the purpose of this amendment is...
Frankly speaking, we can discuss sometime again because I'm not able to understand the facts of it.
Okay, I'll discuss you in person then. Thank you so much.
Sir, there was a question related to 148 in case of search.
I believe, my suggestion will be, since we are discussing today only budget, and there are many viewers who have joined, I can see the large number of participants today here joining this program. And on YouTube also, I think the people are there. So let's just confine on the budget issue, what I have deliberated upon. And I have my friend Satish Agarwal there. He will like to also share some of the views.
I just suggest, sir, there is only one good question. I suppose you answer that, and then we'll move to Stishi, if that be permissible.
You are the organizer. You have complete freedom. No issue.
No, thank you, sir. As the question is for charitable trust extension to 10 years registration, will it enhance the existing period of, or will it be after applying for renewal? The 10-year registration 5 + 5 they have.
Your mic is not good today. Your
My mic is not good.
Today your mic was not good because I allowed you permission because I was only speaking. So your voice was not get so clear.
अच्छा चलो अभी 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 ठीक आ रही है आवाज?
आप बताइए, बोलिए।
इसमें उन्होंने कहा है कि भाई जो रजिस्ट्रेशन चैरिटेबल ट्रस्ट वाले हैं उसमें जो रजिस्ट्रेशन ऑलरेडी हो गई है, क्या उनकी भी जो रजिस्ट्रेशन एक्सटेंशन ऑटोमेटिकली हो
I got your
जाएगी?
point. See, once ये ना, this is a typical question. ये दिल मांगे मोह.
हाँ.
The question is when this amendment is coming into force, only then it will be 5 to 10 years. You cannot say then the law should have said existing provision 5 to 10 years unless the board comes out with a circular. Even in the case of existing, it will be 10 years. How it can happen here? This will be prospectively. It cannot be retrospective.
So friends, दिल मांगे मोर तो रहता ही है और उसको कभी कभी लेस में भी रखो. And I mean, really, it was a nice deliberation, sir. And you are staying back, and Stiji will take us to the point we left over by you and some more points. Stiji, please, you're most welcome. But before I hand over the Stiji, just 5 seconds more to me. It is, sir, on 5th, I mean, day after tomorrow, Delhi is going to poll to decide the fate of the Delhi in the next game. Please, I'll request, please vote in numbers. And vote in numbers for Delhi, please, sir. Over to Stiji.
Thank you, sir. Thank you, my all dear friends, and for your patient listening. And I tried my best to just share my thought process on the budget, etc. And I say this is one of the good budget, and income and expenditure I have not talked about, which we're talking about, but looking to the overall fiscal discipline, I am happy that this budget is a good budget, and let's hope that the new income tax bill will be equally good as we can see here also on that.
Sir, and I'll request you to stay back. I mean, if that be possible.
I will have to move out because I have another program at 4.
Fine. Over to Stiji.
Another program at 4 o'clock. So
fair enough.
Thank you very much.
Thank you, sir. Thank you very much. Thanks for nice deliberation. Over to Stiji, please.